Okay, so having understood the accounting assumptions and the principles and various concepts in accounting, let us get to the core part of this course, the financial statements. In this video, we're going to look at the three important financial statements and we're going to understand how these are different from each other. So, what exactly are financial statements? In simple terms, financial statements are financial reports which are made from the accounting records of the business. They contain two things. One is it contains a summary of the business's performance. That is, how has the business been performing? Is it profitable? Is it making losses? And so on. The second one is the financial position of the business as at the date of the report. Now, please note that these two things are very important for you to understand financial statement. A performance is usually for a period while the position is as on a specific date. I will explain these two concepts during this lesson. Now, we all know that accounting is a language, and this language about a business is communicated to the stakeholders through this accounting records or the books of accounts. What do these books of accounts state? Accountants usually communicate the performance and position of the business to the owners of the business using these books of accounts. Let us understand this using a very simple example. Let's assume that what you see on your screen is your business. You have a set of eggs, and these eggs hatch into chicken. And chicken again lays more eggs, and this is your story. This is the story that is being communicated to the stakeholders. Now let's assume that a part of these eggs actually belong to a neighbor, and therefore whatever profits that you're making or whatever eggs that you're making in this case, you need to pay a portion of that to your neighbor to compensate him for the eggs that he has borrowed. So as the owner of this egg farm, you would like to understand a few things. How many eggs do you have? Are the eggs increasing or decreasing? And so on. So in order to understand this, accountants usually prepare a small table. This table has two sides. On one side, it shows how many eggs we have, and on the other side, it shows where they exactly came from. Now, we all know that they came from two sources. So let us divide the right side into two. The top portion is the borrowed portion, and the second portion, the bottom portion, is the owned portion. Let's assume that we had 100 eggs. We had 100 eggs at a specific point of time, out of which 30 eggs were borrowed from the neighbors and 70 eggs were owned by us. Now, what happens when an egg is laid? What happens when an egg is laid in your farm? There are two things that happen. On one hand, which is on the left hand side, the number of eggs you have increases by 1. On the other hand, since your farm has been instrumental in making this egg, or rather, in other words, since the egg has been laid in your farm, you own this egg, and therefore the number of eggs that you own increases by 1. Let us look at the flip side of this. Assume that 2 eggs are broken during a specific period. So on the left hand side, the number of eggs you have decreases by 2, and on the right hand side, since the breakage has happened in your farm, you take the ownership for it and you subtract 2. So if you look closely, on both sides of the table, we have 99. On the left side, we have the number of eggs that are there in the farm, and on the right side, we now know how and where they came from. Let's again assume that on a specific day, 10 eggs were laid. So on the left hand side, the number of eggs laid goes up by 10, and on the right hand side, the number of eggs goes up by 10. So we have 109 on each side. Now, since we have so many eggs that have been laid during this period, let's assume that we have decided to pay off 2 eggs to our neighbors. So the number of eggs that we have goes down by 2, and the number of eggs that we owe to the neighbor goes down by 2. And therefore, what was this at the beginning is now this. So 100 has become 107. And similarly, 70, that is the number of eggs that you own, has become 79. And the borrowed eggs has gone down by 2 because you repaid them. Now, How did the business do between these two dates? How did 70 become 79? In our case, it's very easy to ascertain because we had very few transactions. But assume a complicated business where there are thousands of transactions every day. So, in order to explain this difference of how your owned eggs increased or decreased during a specific period or during